What's up, everyone? It's Scotty with MoneyVest. So markets here rolling over once again. We've got the NASDAQ here down a little bit over 1%. S&P 500 down over 50 basis points. And the Dow Jones also rolling over on the day today. So we've got, once again, some deals coming our way. And I want you guys to be ready to take advantage of those deals. And you'll notice, you will start to notice when the markets come down, my enthusiasm starts to increase because I get super excited when I see red on my screens because I'm looking for deals. I'm looking for buying opportunities. And when the markets come down, that's really when we see that. So as always, if you enjoy this video and find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. And of course, links to our Discord and Patreon is going to be down below if you're interested in joining us. I sent out a very, very nice update and a little bit of a sneak peek in our Discord earlier today, basically going over the idea that we are starting off with the work. So in other words, the work is well underway for our MoneyVest platform. So this right here is basically what I mentioned in our Discord, that the work is well underway with late nights and early mornings. It is literally late nights. It's almost 1 in the morning right now, as you guys can see the time over here. It's a little bit over 10:45 or 9:45 in London. New York's just a little bit past 4:45. And again, I'm up. I've got meetings after this video with a few developers and designers over in California. So we'll be getting on board with that. So all you guys can do, that's the least you guys can do, is drop a like and of course subscribe to the channel if you haven't already. And I sent out this update with less than 4 months left for our beta launch for all the members, and can't wait for all of you to see what we have in store and what we're building here at MoneyVest.com. So the user flows, the information architecture, the designs, everything is getting built. And I am super, super excited to bring this to you guys in February of 2024. That's the estimated timeline. We'll see if we actually get that hit. Again, there's going to be some potential delays. Hopefully not, but that's really where we are, and we're getting started. So again, links are gonna be down below, and you do get access. You get early access to the software, to the platform in 2024. So if you want to get access to the beta launch, links gonna be down below. We'd love to have you on board. And yeah, that's about it, right? So also you get access to members only videos, trading view charts, all the other benefits and updates as well. So links going to be down below. So for the day, we did have NASDAQ here dropping a little bit over 1.2%. We had S&P 500 dropping over 50 basis points. Dow Jones was more or less flat, so up over 12 basis points, with the 10-year yield down about 1.7%, right? I did a video on the bond market earlier today, so definitely do check that out if you haven't already, because it does give a little bit more insight into the bond market, the signals specifically that I'm watching and paying attention to right now. But Tesla stock was down a little bit over 2%. And as a result, one of my calls was up over 67%, 68% almost. And, if this one ends up being over 85, 90%, I will be closing this one out for a profit if and when it actually is up over 75 to 80% in the future. Now, here's what needs to happen for the S&P 500 to hold on to this year's gains. And that's probably going to be the title of this video, that if this happens, right, if this one event takes place, the market is going to be in deep trouble. You believe it, you better believe it, because this has never happened in over 16 to 20 years, right? It's been a very, very long time since we've seen interest rates as high as they are. So the only thing that is preventing the markets from this sell-off is the fact that the 10-year yield is struggling to break past 4.8, 4.9%. It's still under 5%. So the fact that we're still under 5% is the reason why the markets are still somewhat stable. We're able to stay above 4,200, right? So that's exactly what we are going to discuss in this video, sorry. So if you kind of read further from Bank of America, from Michael Hartnett, what they really discussed was the idea that the source of the bull market of 2024 is the fact that interest rates continue to stay below 5%. So in other words, while yields on the short end of the treasury curve are already trading above 5%, investors have been more focused recently on the 10-year and the 30-year yields, which have yet to make a lasting break above that level. In other words, stay above 5%. And treasuries stay below 5%. S&P can stay above 4.2K or 4,200 in the near term, given the bearish sentiment right now. But you'll also notice that the client cash plus the T-bills as a percentage of assets under management is also on the rise, right? So we're seeing that level now approach at over 15%, whereas the average has been a little bit over 13%, meaning that clients are now holding on to more and more cash as time goes on. And that also does suggest that, look, yields are higher, so you're getting a higher rate of return on the uninvested cash that you have. And that makes all the sense in the world, right? Because why take the risk and invest in equities when you can get that 5%, 4%, 3% returns in money market funds, in bonds, in certificate of deposits, in banks? You're getting that without the risk. So that's why the cash amount is increasing. And if the yields actually break up over 5% for the longer end of the curve, we're talking 10, 20, 30 years, well, you better believe it. The market's not going to like that one bit. I think dividend stocks and the REITs are going to be the first ones to go. And then eventually that's going to fall over to big technology. And technology has also played a very significant role in the entire market rally. And it's now making up almost 30% of the overall market cap for the S&P 500. So that's another really, really important metric because the market cap has grown as a percentage of S&P 500, and they are the ones that are influencing the overall returns of the market as well. If you take on equal weighted index, by the way, RSP, the S&P 500 equal weighted index, it is flat. It is actually down on the year. So that tells you a lot about the market's dominance as resulted in the influence of the Magnificent 7, Magnificent 8 stocks. Now, they were down today. So Meta here, Tesla, all of them selling off almost 3%. Google was down. Amazon was down. We did have Microsoft, Apple, Nvidia pulling back here. AMD was down 3.4. Energy pushing higher on the back of oil prices. Oil prices did rally a little bit over 4%. And this right here, of course, was the entire market where you did have, again, big tech and technology overall selling off with energy, financials, biotech, all pushing higher. So energy, utilities, consumer defenses were the ones that are kind of leading the way. And every single other sector was down over the last 1 week. Energy and utilities are up and everything else is down. In the last 1 month, we got comm services, energy, technology, healthcare, industrial, financials, all sectors, all 11 sectors are down over the last 1 month. Volatility was up. I actually mentioned this in our yesterday's Discord channel here. If you take a look at Orange Juice, by the way, special shout out to Orange Juice. We've been tracking Orange Juice for well over 3 years now since the channel started. It started off as a joke early on, but quickly became a very much of a theme on the channel where we've been tracking Orange Juice, so much so that we've got members that have named themselves Orange Juice in our Discord. But if you take a look at Orange Juice, man, we should have been investing in this. What the heck were we doing? So if you take a look at the monthly chart for Orange Juice, it is nothing but a straight up parabolic bull market in Orange Juice. It's gone from 85 cents per pound, by the way, this is on a per pound basis, to well over $3.75 per pound, resulting in a 345% rally. Think about that for a second. You go back to 2019, you go back to 2020 during the pandemic, forget everything. All we should have been doing is buying frozen concentrated oranges. And that's what 1 a.m. does to you. It's way too late here, and I'm talking about buying frozen concentrated oranges because that's where the market's moving. That's where the gains were, 345% gains. Absolutely phenomenal. Bitcoin here, just a little bit over 26,000. Ether just over 1,500 right now. So crude oil here is, of course, with a massive rally up over 5%, back over $87 a barrel. And that's exactly what we have seen in crude oil coming down to that support and, of course, getting bought up fairly quickly. And the Middle East, with the conflict that's going on, that has a lot to do with it. And the next resistance is going to stay put at $93, $94 per barrel. And, of course, support level is going to stay put at $82, $83 per barrel right now. Ether here, consolidating sideways, 1550 is where it's at. Bitcoin here, just a little bit under 27,000, still kind of hovering over its higher low right now, still in a very much of an uptrend at the moment. So resistance is going to stay put at roughly around 30,000 for Bitcoin. Volatility here with a massive spike, almost getting up to 20, so 20 levels. And again, we talked about in one of our previous videos. Again, if it gets up too high, it's time to buy. It gets too low, it's time to go. And right now, once again, it's getting up to 20 levels. So this is going to be, once again, on constant watch. If volatility breaks above 20, gets up to 30, 35, 38, 40, 42, that's your window of opportunity. That's really our discount opportunity here to dollar cost average and, of course, start buying a little bit more aggressively in the markets once again. So that's exactly what I'm going to be paying attention to from the market in terms of VIX, up over 15% on the day. Now going over to S&P 500, so SPX here, selling right back down, which again, is not surprising considering what we have already discussed, right? So this right here is the lower high and the lower low pattern, although still validating that support at 4,300. So this right here was a very, very nice support for the S&P, and we are right now still very much in the context of this downtrend of lower highs and lower lows, something that we have discussed in our previous videos. I mentioned that we are not out of the woods yet. We're not in the clear, considering the markets are still showing signs of weakness at the moment, and this is the lower high and the lower low pattern. Talking about the NASDAQ here, down over 1.2%, and again, very similar to what we have discussed before. We're not out of the woods yet, and even though some people have disagreed with that analysis, we are still trading very much in this lower high and lower low pattern, showing signs of weakness, and that's exactly where we are. And that's why, you know, we've talked about how it's not the time to celebrate just yet. You have to understand that, okay, we're still very much in a lower high, lower low pattern. That's exactly why, you know, I got rid of my TQQQ position last week. Exactly why I got rid of my trade in the defense sector, because this was nothing but a technical rebound, right? 90% of this move happened last week because of that technical rebound. And did a video on this over the weekend talking about how a majority of that move happened because the technicals were lining up for that move back higher, nothing else. Talking about Apple here, and Apple getting rejected. Is this even a surprise at this point? Like, is this a surprise to you guys, or is it like pretty obvious? It should be pretty obvious, right? I mean, we're getting up to that resistance, getting up to that lower high, and got rejected at 179, closer to $180, and the sellers stepped in. We're down over 1%, still in the context of this downtrend, lower highs and lower lows. Next support is going to be down to 172. Talking about Amazon, you know, same exact thing. We didn't quite fill the entire gap, and we're still very much in the context of this lower high and lower low. I mean, I could even come down to this lower high over here that Amazon just formed, but I'm going to keep this intact for now. And support level is going to stay put down to 126, all the way down to as low as 121 for Amazon. Tesla, on the other hand, broke down. Tesla with a breakdown here, down almost 3%, and you know, breaking down below this higher low, and still very much in the context of this lower high and lower low pattern. So it looks like the bears did win, and that's exactly one of the reasons why my call was up over 68% on the day, because it did break down from that support, and right now we're seeing a significant sell-off here for Tesla, and I wouldn't be surprised if it does come down to 240s. Now, Tesla is reporting earnings next week, so again, this is going to be super exciting, super important for Tesla, but next support is going to stay put down to 240s, all the way down to $212 per share. Talking about Meta platforms here, and Meta here also selling off from that resistance of around 325. So we're seeing that rejection come back in. Support level is going to stay put roughly at 314, 315. So very, very important level for Meta at those prices. So that's the support, although it is still making a new higher high. So Meta is a little bit different than other stocks. Still very much trading above its 52-week highs. It did see a bit of a pullback here on the day, but nonetheless still making higher highs and trading at a support right now. Talking about NVIDIA at the moment, NVIDIA here also selling off. Again, doesn't come as a surprise considering that we were trading at its resistance here, 480 to as much as $500 per share. And of course, right now we're seeing a little bit of that pullback considering that, you know, RSI and MACD did get a bit of more on the overbought side. And right now we're starting to see a bit of a pullback for NVIDIA. It's very, very normal, down 3% at the moment. Advanced Micro Devices didn't quite get up to 112. 112 is a very important resistance, as we have already discussed in our previous videos. Support level is going to stay put in the low 100s for Advanced Micro Devices. And even though we did get a bit of a breakout from this lower high, lower low pattern, kind of like this falling wedge, we're starting to see AMD pull back a little bit. Support level is going to be in the low 100s for Advanced Micro Devices. Talking about Netflix here, so very quickly going over Netflix, PayPal, and Square. So Netflix right now at the moment, coming down and of course breaking down below that support level that we discussed in our previous videos, and the next support is going to be sitting roughly around $332 per share. So this right here is going to be that next level to watch for Netflix. PayPal on the other hand, also breaking down to a new 52-week low. The story of PayPal, right? So coming down to $55, and it was a little bit of a bear flag breakdown. So what you'll notice is that we were selling off, then we consolidated sideways. Then we broke down even further, and of course the resistance is going to be all the way up to $69 to $70 per share right now. And right now we're obviously seeing a bit of a breakdown below $57. Now again, we're going to be switching over Square and Enphase. Square and Shopify, not Enphase. Square and Shopify very, very soon. I'm still kind of running through some of the suggestions that you guys are making for which companies to replace these two companies. So we'll be doing that very, very quickly. But this right here is the support, roughly sitting at around $42, $43. And of course, a breakdown below this is going to put us down to 34 bucks. That's going to be that next support level. Resistance is going to stay put at $50, $55 per share. Now, going over to Google, Microsoft, and Enphase. Google here also pulling back. Doesn't come as a surprise considering that it has been on a very significant rally. RSI MACD also a bit more on the overbought side, starting to break down below the support of $139, $140 per share. So next support is going to be sitting roughly around 126 for Google. Microsoft here also pulling back and selling off. A little bit of that lower high still forming at the moment. Next support is going to be 311. I would love to buy Microsoft in the low 200s, obviously, but even 290s I think is going to be reasonable for Microsoft considering the valuation. But right now, it's still very much in the context of this lower high and lower low pattern, and of course, trading in this downtrend right now. Talking about Enphase, and Enphase here, very, very flat. So not really moving all that much. Down about 62 basis points. Still consolidating sideways. Still getting rejected at 128, 129. So that's really where the resistance is going to be. And finally, we got Shopify. Definitely selling off. We got a little bit more gap that's been filled. And right now, resistance is going to be $53, $54 per share for Shopify. So that's where we are with the entire market. A little bit of a sell-off, which again was expected considering the technicals were lining up for a rebound last week. But this week we're starting to see that momentum fade and basically the markets roll over. I think it's going to be a very macro-driven market, and it's going to be a market where we can trade, we can take opportunities, and of course take advantage of, some trading ideas here and there. But overall, from a fundamental standpoint, from a macro perspective, I think there's only going to be certain buying opportunities that I will highlight and of course mention in our Discord as well. This is one of those things, right? For the long term, this is a serious buying opportunity in my view, but that doesn't mean that there could not be more potential downside in the future, because there can be more downside considering everything that we're dealing with from a macro perspective. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. That's all I'm asking, is that you drop a like, subscribe, and of course, link to our Discord and Patreon is going to be down below if you want to get access to all these stock reports, members-only private videos, and the early access, the beta launch to our MoneyVest Pro platform in 2024. Link's going to be down below. As always, happy investing. I'll see you all in the next video.